It's
All views expressed by the hosts and guests in this podcast are solely their opinions and do not reflect the opinions of their respective employers. Guests and hosts may maintain positions in the assets discussed in this podcast. This podcast is for informational purposes only, and nothing in the podcast is intended to be financial, legal, or even life advice.
Yo, I think Marco did a fucking good job this time. He asked a VC about his view on founders OTCing his tokens out, and also we covered his thoughts on Rushi.
Dum-ta-dum.
So Marco, tell us more about him.
Yeah, I mean, we had Pet3rpan from 1KX. For those of you listeners who might be more crypto native, he has built his names throughout the year. Of course, building 1KX. They raised their 75 million fund last year. One of the more notable names out there, the back Cam and a couple others recently. Pet3rpan himself was also very involved with a lot of like DAO investment group. So like it's called Hydra Ventures. It was quite big a couple years ago. So like anyway, he's a bit of a yapper, and you can see a lot of his takes on X. And I felt that we were able to bring that out from him in today's episode. GM everyone, welcome back to another episode of More Than Speculation. And today's episode, we have Peter, or more famously known as Pet3rpan, on X from 1KX. Before we get started about his journey and so on, let's jump right into the rapid fire questions.
Yeah, what's the biggest project red flag as an investor?
I think teams that just light money on fire. I hate teams like that. I'm also like not a big fan of teams that overraise. That makes me really uncomfortable, and it sort of happens amongst a portfolio. It happens here and there. It's a I think it's a really important to me it's like a really critical litmus test of like, okay, how much you raise, and what do you do with that capital? And I think this is going to generally be like it's an overarching theme of like how I think about things of like great projects do take time and money. And they produce a lot of value. And it's this idea that like, you want teams that can like make a lot with very little. And I think, capital efficiency is a part of that, not over-raising, not lighting of money is a big part of that. So, yeah.
What's a big VC red flag?
Don't use products on chain. Like, like send me your address. Like, show me what you've used, what you've touched. You don't need to be even a user that like authentic user. You just need to try things out, play with things, have a real opinion formed from first party sort of, data. Yeah.
What's the favorite type of founders?
Going to be a broken clock in this one. Treats cash, runway, and spend with incredible respect.
Is VC dead?
No, the power law will always exist.
What are you most bullish in the next 3 months?
No clue. My mind doesn't work in 3 to 6 month periods. I'm a little stupid when it comes to like I think short term timing. I think that venture is a great fit for me because I'm just stupid enough to believe in believe in
something,
the potential. You believe in something, right? And I'm from that perspective, I'm a little gullible to the idea of a lot of possibilities that play out over 2 to 3, 4, 5 years. And I'm often swinging, making investments based off that, outlook. It's a little naive. I think that, but I think in the past, best decisions have always been, underwritten by what's going to happen, what's going to play out, I think over a longer time frame.
I mean, that's part of the game, bro. Like, he's not trading Housecoin like you.
There's a lot more questions, but I want to make sure we jump on the quick intro first. Yeah.
Totally.
Yeah, I mean, if we can get like a couple quick intro about yourself, about your firm, what's your background for our listeners who might not be aware?
Totally. I'm Peter. Thanks for having me. I'm a partner at 1KX. We invest mostly during the early stages. We write 2 to 3 mil checks at seed. 5 to 8 at the Series A range. We also build liquid positions, but oftentimes we take a fairly longer time horizon with those. We're a little bit more patient, and we sort of size up on the liquid side. We're not doing, we're not really actively managing our books too much, I would say. I think that people, our founders would probably describe us as, investors that try to build debt first and invest through that lens. And I would probably say that the founders that we engage with would probably call us stingy, would call us hard to get to some extent. I think we're a little bit more old fashioned. We try to build relationships first. We try to understand how cash will be used. It's crazy. We try to really invest in teams that have, I think, a plan on how to win, right? I mean, to some extent, I think we're a little boring. I think like
we're boring is sexy sometimes.
Yeah, we try to do really, really basic things really, really well, right? And yeah, personally myself, I used to be a designer. I learned about Web3. And mostly I joined crypto in 2017, and sort of got fascinated by the world computer and found it crazy that no one was thinking about applications. So that really set me down the rabbit hole. And I became an investor to like fund apps because I was just frustrated with the lack of attention there.
So I got to ask you this question as somebody who has been in venture before. What do you think are the biggest misconceptions regarding crypto VCs?
Yeah, I mean, I think like 21 skewed this, like created this skewed idea of like this.
Everyone is a VC. Everyone with 10K is a VC.
Right. I think everyone sort of has this image in their heads of like a VC is like this. It's like the Monopoly man, the Monopoly icon, which is like this guy, who's like laughing, has a briefcase full of money, running around with a top hat, and I think it's just like, they see. I don't know. It's not a glamorous job. Like it can't. Like I can see like why it can be, but I think it's a lot of pain if you're doing it right, and if you're doing it long term. There's a lot of pain involved. It's far less painful than being a founder. That's for sure. But I think you've got to have an appetite for pain, and it is you've got to I think it's a mentally challenging, role in profession. I think most things are if you're doing it at a high level, but I think that to me, I think it's like venture is like a labor of love. Like it is. I think like I've often thought about like, like what is the point in which like I would like stop venture investing, and I think that would be when like there's enough market participants out there investing the way and allocating the capital in the way I think the ecosystem should be, and until that exists, I think I sort of think about it as like there's a responsibility that I sort of have is like if I have a worldview and I don't see it being represented out there, I think it's like my responsibility to champion that worldview and champion I think capital allocation the way I believe is not only efficient, well returning, but I think generally I think like advances the narrative, right? And so I think it's like I see it as like incredible. I don't know, being a VC, like it's the best job in the world. You're working with the best people in the world, the brightest, hardest working people. It's incredibly competitive, but it's a lot of pain. It's like I think a lot of people like do venture for just a couple years, and during that time they're mostly writing checks. They're not really supporting. Nothing's really going to shit just yet. But I think if you're doing it for more than like a year or two or three, like you start to realize that venture is all about getting kicked in the nuts and getting back up every day, and really being unbothered by that, right? And being a little stupid. I think being a little stupid, like being a little naive, being just a little gullible, about what can be.
Is there Is there like a specific example that you think it worked out perfectly in this sense? So just to give the readers a little bit more direct emotion connecting on that.
Yeah, I mean, I can talk about deals, because I think like that's, investor can say all they want, but who they are the deals they do, right? And I think one of them is simply just that right now today we're still investing into at 1KX, we've invested a lot into the consumer application layer, especially like teams building with building with NFTs as a primitive, and we still are today, when everyone else has given up. And it's not like we've had like incredible hits, right? But we've learned a lot about how, what the idea maze looks like when you're building with digital collectibles or NFTs as a primitive for social, for gaming, for other categories. And it's been, if you look, sort of at these markets, it's just it's a battleground, right? It's not looking pretty. And I think and I think that's part of the naivety that maybe we have a little, or like I do definitely, is that I sort of look at it and I say that that was bad, and I sort of I try to learn what I can, and I think like I still try to think a bit about like, okay, what could become of this,
Actually,
as opposed to what has it been.
So it sounded like you need a lot of conviction, vision, and you have to believe in what you invest in, essentially almost advise and build through the way, and held through even everyone say is wrong, right?
And just a little touch of insanity.
Okay. So what's your process like? Do you believe in do you believe in consumer? That's why you find the teams there. Or do you have like, I believe in this person, that's why I think I agree with what he say, that's what I'm doing. Like obviously as a more long-term investor, narrative do you shape? Do you predict what might happen? Let's say the next halving, the next wave of revenue base, the next Web3, the next mobile or coming like that. Then you find the teams, or is it more like you find founders that you kind of build on top?
I guess and before I sort of get to that, I guess like there's a question of like what underwrites conviction, right? And personally for me, it's actually history. Like I study a lot of history. Like I've studied like, a lot about like early internet history, early mobile history. I think even going back, I like look at, the history of like telecommunications, history of cryptography and stuff. I think history like gives you answers that aren't obvious, looking forwards, right? And at every like major, I would say, inflection point for like an emergence of new platforms, you had this massive like disruption, just like massive disruption periods, and almost every time there was this inflection, it seemed a little non-obvious, and you sort of had people like investing a little too early, getting burned by that, and giving up on that. It's like a general like pattern, and I think that so I sort of so I think like I'm informed by a lot of history and what's happened, right? And I think like that informs me like with regards to like market psychology, with regards to what the actual process looks like, what the actual process of disruption and innovation looks like. It's grimy, it's not pretty, and I guess like what do I underwrite like deals and investments with? I think it's a lot about like, thinking from first principles of like, okay, we have this new technology, we have a new platform, we have a new primitive to build with. What can we, build with this that would never be able to exist outside of Web3? What is that net new? And oftentimes, net new technologies, are responsible for creating 0 to 1 market creation. The rarely incremental technologies. They often create new markets that have never existed before. They often create new users that have never existed before, and they create new supply and demand dynamics, right? And oftentimes, when you're at the start of that, it's I don't think you can easily sit down and rationalize and justify that the size of the market, or it always looks a little EV negative, right? And I think that's why you have to think about like what's possible, what's net new, what's that 0 to 1, and who are the teams that recognize that and are effectively going to tackle that idea maze, and then effectively take something to product. Take a product to market, right? That will effectively that will create that market. Yeah.
Okay, so it sounded like first you identified the trend switch, which is like, for Web2 was the mobile. A lot of people didn't think mobile would come. Like, Microsoft was a little bit too early with the tablet, and then with Web3. Before going into what do you think is next step in picking teams? Like, what other than being cheap with money, what kind of qualities do you like in founders?
I think that hunger, willingness for pain. Like, I think 21 ruined the perception of an idea of what it means to be a founder. Everyone got too cash rich and like, you know, everyone started living the good life. Like being a founder was like too good, but it's like, no, like kind of sucks and it's meant to suck and it's the worst thing on earth. But you do it for, you know, a bigger reason than yourself, right? You do it despite the discomfort, despite the pain. And that's what I look for. It's like willingness for pain. I think, you know, if you're basically able to swallow that, and you know, it usually means you're hungry enough, it means that you're working harder than everyone else, right? And I think like hunger, yeah, that's right, yeah, chip on your shoulder. I think this is like by far like the thing I look for, like number one thing I look for, for sure.
What did you think about Rushi?
I mean, so I don't know, like so I guess like 1KX was a little late to the party in the sense that like we like looked at like the round like movement over time, right, as a deal, and I also like had like some brief interactions and calls with Rushi like throughout, like I would say in the last year or 18 months, and during the earlier stages it was just like it didn't make the deal like and what he was building didn't make a lot of sense. It was like, okay, this move, he's building a move network, but we're the developers. It's a lot of you know, railroads with no passengers, right?
No, that's a good analogy.
And when and it's a it was a bit of a weird like, and at that time we just looked at it as a product and said like this makes no sense. Like, where's the demand for this, right? But on the personal note, like when I talked to him, when I basically asked pretty serious questions of like, how are you going to like build a developer community? What is your edge that you're building, you know, on the as a network? In you know, interactions, I just didn't get a lot of serious answers, and that was like, I think, a pretty big red flag, you know.
It was interesting because for me it was like he's willing to put himself out there that far. That gave me the sign of like he's willing to take the pain, he's taking the risks, he's taking the it is tough work, right? But again, like I was like, all right, even if the product doesn't work out, it could have been the XRP of this season kind of thing. That was what was in my mind. Like, I mean, like money fixed product in some sense, right? With time, and then like I thought he had the founder fit.
You need to have the balance. I think you need to be, you know, hungry, yes, but I think, you know, and you don't have to have the right product right now, right, at the point, and you don't have to have everything figured out. But I think what is also the counterpart to delusion is simply intellectual honesty, right, and like seriousness. It's like, you know, I think I think that's the other thing I look for is like, you know, is this founder actually taking follow through seriously? And and I think like, you know, I think it's easy to sort of generally spot which founders are taking follow through seriously simply by understanding, you know, are they asking the right questions? Even are they thinking about the right questions? Are they thinking about the hardest questions? And you know, it's pretty easy to recognize when that's the first time a founder has been asked those questions or even have thought about, I think, the harder problems, right? And it's revealed by the lack of honesty in the answer.
I mean, you're the right one. I'm the wrong one here. So like, so like, I took a wrong bet, but yeah, I was actually betting them on liquid as well because I thought. But yeah, so Marco actually mentioned you guys are quite bullish on Ronin, right?
That's right.
Maybe like as a quick segue, like I like just to like wrap the questions around. Like we've been hearing a lot more, I guess, like criticisms. Oh, there are more and more chains, right? So like, it's a two-pronged question. Like, I want to get your take on like, are there too many chains? And given that you've been quite public on your own thesis, like, what's the angle there?
Totally. I think broadly, you know, I actually like said a lot of the same things before, you know, like, you know, like I've been saying this like for years and years, and I actually like changed my mind, I would say like recently in the last 18 months. And I think mostly, I think if you zoom out a little, like what a chain? So they're basically like, and you know, the networks that serve the block space market, right? Like this supply of networks that produce block space, demand applications that consume block space or end users too, right? And I think like from a market growth perspective, I think I think it's the reality is that there's less than 1% of the true like design space for applications have been discovered, and we barely have a handful of apps of PMF and revenue at scale. And if you simply believe that like if this is the end game, okay, like maybe the block space market will not grow.
Right.
At least demand for block space won't grow. But I think in reality, if you believe that it's less than 1% of the design space has been discovered, I think it's an easy bet to say like the demand for block space will grow exponentially. And the question is not about who captures this demand today, but rather when the market grows exponentially during growth periods, who will capture the majority of that demand, and they will become the new winners because the market will just grow. So exponentially, and that really determines and king makes the new winners, right? So I think from a business perspective, it's about like who can capture this demand and will like demand grow, right? And from that perspective, I think there's a clear like case there, an argument to make. The question is obviously timing and other factors, and I think there's major questions around how this demand will be captured, right? I think that in the past it's been captured by tech differentiated teams. I believe that going forward it's going to be captured by teams that have a GTM edge, or even applications that simply verticalize down the stack with existing users, existing liquidity, right? So I think in general, like I sort of came round to like believing that, like, yeah, I think block space demand will like grow. That said, that I think that said, I think there's a lot of block space today that serves the demand poorly, with very little PMF. Like there's just chains, producing block space that does not connect with developers, does not serve end users, that don't have PMF and are run, by I would say like fairly incompetent operators. They misspend, they light money on fire. The edge mostly has been, market manipulation, painting the charts to lure in retail investors, right? I think like the reason why like Solana's praise so much is simply they're just competent. They do the job well, And I would say that like the first business competent, L1 or chain, right? That
Yeah.
said, I think that there's a lot of teams out there that have a real edge against them, that are effectively like meaningful competitors too, right? And so I think like if you look at like the chain landscape today, it's just like it's misrun. There's very few competent operators, like I would say like running these networks and growing them. And when the market, as like I would say like the market grows 10x, 20x, I think there's just a lot of room for new winners to be made, right? So that's why like I have a directional view of like I think block space is just going to grow and demand. Demand is served poorly. Who can serve it well?
Understood.
Got it.
So I'm thinking how to divide this. So you're saying that block space can be divided. Do you think it's like sector specific? Let's say faster blockchains, smaller blockchains, smaller blocks for DeFi, for consumer, cheaper. Like essentially, it's and serving it properly, like managing incentives, managing business part of things. Like, can you be a little bit more specific, or some
Yeah,
things that you're bullish on?
totally. I think like there's different ways to like let's say win, uh you know like aspects like I guess like market share or demand, right? Yeah, like like one is obviously with product, right? You can build a new network that serves new assets. It effectively like prioritizes like certain assets as first class assets, right? Whether it's RWAs, whether it's let's say I would say like high frequency, low value transactions, right, etc. Like different use cases from DeFi games to IP, etc., and so on, right? I think that um, I think in reality, like I think the space overly focuses on product a lot, like a little way too much. I think that you can build a lot of use cases, on a general purpose EVM network, and you
Yeah.
can sort of get to like product, like I would say like PMF and like product like clarity over time. I think that what is massively missing is good service, competent. I would say like um, competent, like, I would say, operating, ability, right? To simply like bring applications that have never been on chain to effectively grow bottoms up developer and founder communities, helping these communities to go to market. I think in different aspects, right? Um, I think like business competency is probably the biggest missing gap in the block space market today. Um,
Okay, so gun to your head, right? What you said just now. What is the project? If I'm making you to build a project, what would you build, and how would you start it or run it? Actually,
It's always a hard question for a VC.
I would build a Web3 social network that leverages some sort of like on-chain primitive as a core like I would say building block, right? So you can sort of like think of like Web2 social media networks, that today they're all the same products. They're all like this text, image, there's stories,
yeah,
there's live streaming, they're the same business, right? But they're differentiated by like what was the core social graph primitive that they initially leveraged to like grow, right, and differentiate. So Reddit is topics. You're interacting with complete strangers, but you're connected via topics.
Yep.
Facebook is mutual friends, right? Instagram is photos, right? Messaging is messages and like effectively one-to-one contacts. And YouTube videos, etc. And effectively, like these are different relational primitives that relate and connect to one another, right? And as a result, you meet different people, different types of people through these networks. You get, that's the social value, right? Like LinkedIn is for the professional network. I believe that there's massive design space to take on-chain primitives such as like tokens, NFTs, and build net new ways to relate to one another through these primitives and like building blocks, right? A great example of this is like Rodeo, which is a great company. Basically they're building Web3 Instagram, except rather than liking comments, etc., you engage with others by collecting and paying, to buy, editions of other people's work, right? And it's a way to effectively, for true fans to signal skin in the game to support creators directly. And I believe that, at least for me as a collector, I've met new people by engaging in this, by collecting myself, right? By being an active user that I would never meet elsewhere, right? And I think this is a big design space. I think a lot of teams are basically tackling Web3 social in a horribly skeuomorphic fashion where they're building effective, like in my opinion, Farcoster, right?
Web2 something, yeah.
Yeah,
basically.
like Farcoster is effectively a Twitter clone where that they're effectively taking the same social graph structures from Twitter and creating a decentralized backend. And their success has mostly been a game of social engineering where they've been able to take a part of the social, like the social graph, and bring it over. And that's why you get the value you get on Farcoster, right? But it's like if you just sort of one litmus test is simply like, can you meet the same people on Farcoster on Twitter? And oftentimes, yes. There's nuances there, but I think there's net new social networks will help you, will generally like allow you to engage with people you would never engage with anywhere else, experience and meet others, experience things that you would never be able to experience elsewhere, and it's a unique place on the internet, right? And I think this is good. This is I think this is a massive opportunity. And I think there's plenty of verticalization opportunities once you can build a sticky network on this. Like whether it's block space into transaction, like I would say like trading infrastructure, any other transaction related infrastructure.
Got it. And since we're in the topic of, I guess, just like social media, I just want to segue a bit into like if you can share with our audience like your journey on like crypto Twitter, because I think like a lot of people are kind of, they know you for your like PFP and also like the threads that you have like created before. Just like any stories there, or just like what's the main takeaway?
Yeah, I mean like I feel like it's just like I started out like as a complete nobody, right? Like it's just like I didn't know anyone in crypto. Like I mean I initially like joined crypto through like the grassroots developer community in Sydney, right? And then sort of met initial group there, but didn't really know anyone in CT. So a lot of the times it's just trying to meet people, be relevant, you know. I guess it goes into the sort of like a lot of my first years of crypto was just trying to figure out like how I can like be helpful, and mostly find a job in crypto. like,
What's
uh,
what's the best way to grow on CT as an investor?
just say what's on your mind. To be honest,
Okay.
I think authenticity is rare and scarce. Um, yeah, like be yourself. Sounds like super cliche, but it's like yeah. And it's not a great answer.
Actually,
No,
do
I
you
mean
have
like
any
it's
answer? Do you have any questions for us, or in general? Like,
What's your perception of my CT character or persona?
okay. Maybe like I can start. I don't remember like 2 to 3 years ago. Like I think you were a bit more active back then, but I think I kind of I kind of see your persona as like definitely more like you're not super edgy, but you're also like not corpo. I guess like it's more in the middle. It's a bit of a thing boy style sometimes, but like not in a bad way.
similar thoughts. Similar thoughts. It's you're one of
Yeah.
the VCs that know what's going on. Like I think you genuinely believe in what you believe, but you don't write for LARPs, and then you're not the guys that don't get their hands dirty to understand the space in some way.
Oh, thank you. I
Because like I
try.
think sometimes when like people are clearly like they've never, let's say, like farm some like stable coin on another chain, right? And then they start talking about stable coin, like it's very obvious on like the like little things that
So I think crypto is a weird crypto Twitter is a weird space, right? Like just normally on certain levels, like VCs do not talk the same language as a trader, and it does not talk as almost the same language as a liquid fund or let's say a smaller project founder like. But for some reason, because it's crypto, everyone is mixed in one thing.
mumble
So
jumble.
I mean,
Yeah.
like in the Web 2 version, right, it's perfectly fine. The VC doesn't get the hands to use any product, right, in some sense. But like in crypto, because I think most VC are a lot more short term horizon. Like it's very different. But whereas like yeah, so I think it's because of that. So it makes a very strong belief of like the difference in I mean, obviously the deal structure and etc. That changes the view and perspective of VC. I think in general a lot of VC gets too much hate, and a lot of VCs basically are not in the market, but people assume they should be as well, and that's why there's this conflict of in general.
Bro, they're gonna be saying that you're just saying this so we can get deals. Just kidding.
I think
Yeah.
that it's okay to hold like venture capitalists, to a high degree. Like the bar's too low, and I think anyone in like a position of like I think like investors like play a critical role in underwriting like, you know, I would say like um, underwriting like quality, underwriting teams, people, and whether you like it or not, it's like, well, people like it or not, it's sort of like it's an important like function. It's an important signal, and it can be a signal, or it can self-destruct as one. And I'd like to think that the better, like the more like authentic and signals there are for like um, for the space, like great. And there's like a diversity of different signals you get from different archetypes and groups. So I think it's like, yeah, investors should be held to high regard, like to a high level, right? Like, and they should be critiqued, they should be criticized. I think it's perfectly like healthy.
Nice. Actually, do you, before our last questions, do you want to leak us some alpha? Or I know you don't do short term, but is there any trend that you're seeing? Maybe not price sensitive, but in general.
I think like at least on the venture side, I can say that like I have a strong belief that next generation of winners on apps and infrastructure are going to be won by teams that can win on distribution, not tech, and it's going to really confuse people, because I would say like for the longest time we've been bottlenecked by technical bottlenecks,
Yeah.
and we're getting to a point where the table stakes are good enough to really win.
Yeah.
On the application layer, on the end user side, and then that's why I think like, you know, um, yeah, some a lot of the space can be like a little confused at sometimes of like why we invest in what we invest in, right? It's because we're betting on distribution, not product, not tech.
You can definitely see this in the bridge space right now. In the bridging solution, like how Layer Zero outrun and took the opportunity to outtake like Wormhole and another
Bro, it's just
without naming
it's
too
just
much, but yeah.
it's just Wintermute like in the back, man. It doesn't matter.
It's not just that. No, it's the way they acquire projects to use their token standard. It's distribution, right? Like it's not the when we think of a distribution, we first think of like users, right? But actually, their biggest mode is they're locking in distributors, which is token, whoever is listing token, etc., etc. I agree with you on this point. I agree. All right. Last question. What do you think is required to make it in crypto?
Willingness for pain, man. Yeah.
So much pain in it.
I think willingness for pain, and you got to have a vision. I think that everyone who effectively survived from 17 or like 18 to 21 were kind of, like weren't the most rational individuals.
What was your biggest pain?
Honestly, it was spending the first couple of years in cryptos, like 17 to, I would say, until I had 1KX, hardcore unemployed. Trying to effectively like work on bringing attention to the application layer. Like, and throughout that time, it was like just living off fumes. Like begging for grants while building a community known as Metacartel. It was like the first application layer community in Ethereum. Scraping together $100,000 to just give out grants to fund apps. And like it paid for like a month or two of rent at best, right? And scraping together money to form the first investment DAO to fund applications that the community. It's just this whole period was me trying to like be useful. I think like, but also like just a period of like hardcore. Like it's what I ended up spending my time on because I was just like couldn't find a job in the space, and I think that was a period where it was like it's kind of like questioning like what am I doing with my life? That's for sure. But it's just like taking step by step and working on what I thought was really really important. And first, like that's why I wanted to become an investor. It was like built this community, was spending all my time trying to like create attention around applications, supporting application teams, trying to get the EF to care. They didn't, and I just wanted to take take matters in my own hands. And I think it's just, I grew up in the internet, like I chronically online since I was like 11, 12, and made all my friends on the internet, learned everything I've learned basically off the internet. And this idea of a world computer, just like, it's just incredibly exciting of like, I'm incredibly curious of like how the internet will evolve and grow. And I think nothing excites me more than this, and to be a part of it, to actually, I think, be at like ground zero to like, support and like fund teams from day one, to go after this and to shape what the internet will become and look like. And it's sort of like this incredible, like, I think, privilege to be part of this. And I've always wanted to do this. Right. But it was like, yeah, like I was kind of following this without a real, like, without real sustainability. And I think being an early stage investor is just I think like a perfect fit in terms of what I really want to do, spend my time on. And I think the incentive structure like works well, right? And I think it's like I'm delusional enough, as well, for the role. Yeah.
Got it. All right. I mean, we try to keep our like episodes a bit shorter because like everybody's a TikTok brain these days. But thanks again for your time, Peter. Is there anything that you want to show, like anything on the show notes, like anything, or like where can they find you?
I'm on Twitter a lot, obviously. DM me. I'm it can be hard to respond to everyone, but like, yeah, I'm very online.
Well, that's it, folks, and thanks again for making some time, and we'll see you next time. Cheers.
Thanks.